Trading Buddies Thursday edition, the very last Thursday edition of Trading Buddies, as it turns out. Given that Ash and I have decided to concentrate on Mondays for Trading Buddies only, and as of next week, that will be the case. So there won't be a Thursday next week. There will be a Monday edition of Trading Buddies only. So I hope you can join us each and every Monday for that, when George will also be in to tell us all about his 5-minute trading strategy. Okay, let's get stuck in, shall we? And have a look at gold today and see if we've got a trade that we can place on the 1-hour chart as we go into London session. There we go, got it. Right, hopefully you can now see my my gold versus the dollar screen and the 1-hour chart depicting the fall of gold. It continues to fall, slight consolidation, a little bit more protracted consolidation, but bang, 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 bang. Had you been trading this system all this week, you would be having a wonderful time. I wonder if today is going to be the jinx day. Let's see. We've got a range, and those of you here for the first time, thank you for joining, and this will be somewhat new to you. What we're attempting to do here is catch the breakout of Asia session on gold versus the US dollar on the hourly chart. So what we do first up is isolate what price action we have in the Asia session. And Asia session starts with this candle here. The high, I better go a bit tighter, otherwise you won't be able to see it. So the high of the session to this point is that high there, and the low of the session to this point is that low there. Very, very tight range today as we head into London session. That can be a really good thing, and it can be a really bad thing. Righto, so the high of that bar is 1877.93. I think I'd be inclined to go 1877.98. And the low of the range is 1873.54. I'd be inclined to go 1873.50. So they will be the two parameters that we use. So just to explain, we're placing an OCO if we actually do take the trade. We'd be placing an OCO, so one cancels the other. If the long triggers, we cancel the short. If the short triggers, we cancel the long. What have we got as far as risk is concerned? We have got about $4.50 in risk. We would have to exit at the daily pivot, which is about $5, nearly $6, $5.80, let's say. Going short, however, we would have to take on this low, which I don't like doing. So what did I say, $4 something, $4.50, gets us not even $1 to that low. But we're using the pivots, so we've actually got $9, nearly $10 to DS1. So we have to trust that price breaks through that level. In terms of reward to risk, I think that's a reasonable trade to take. So we will be taking that trade, and I'll set that up right now. Don't like the fact that we're near the bottom, but hopefully it'll pull back off that. Now we are trading this at 0.25% maximum, because it is not yet it's not, there aren't no such thing as a foolproof system, but it's not completely proven yet to be effective over time. 1877.95 is what I said. 1877.95, and the stop loss is the same as the entry for the short, and that was 1873.50. 1873.50. And there's our change of candle, so we can place that order now. 1873.50, 1877.95, That is for the buy, and we'll place that order now. So that's in the market. We'll place the short order at the very same time. And that was a sell stop, or it will be a sell stop. Same risk, sell stop at, what was it again? 1877, sorry, 187350. 1873.50. And the stop loss, same as the entry for the long, which was 1877.95. Okay, so looking for the breakout, target daily pivot, target DS1. And as I said, I'm going to put that target in. That is the short. So the target is DS1. And the price of DS1 is 186325, let's say. 186325. That's that one sorted. And the buy, oh yeah, the buy stop's there. Why haven't I got a target on that? Because it's a set one, right? Let's fix that. Modify buy stop. Target is daily pivot, which is at 1883.75. Target 1883.75. Done. Right, there's your take profit on the buy. There's your take profit on the the sell. And hope we get the sell, because that would be more money in our account. Righto, I can leave that alone now. Now, as far as gold is concerned, if I were to look to trade gold today, what would I be thinking? Swishy yen TP1 hit. Okay, that's good. With gold, big sell-off, big sell-off. Forewarned is forearmed. We got that warning up here on Wednesday of last week, and it's done nothing but, well, had a little bit of retracement day there, but now it certainly seems to be on fire to the downside. Next port of call is, probably around about where we've got our take profit level, actually. That is our take profit level. Yeah. Isn't it? Seems to be too low. Sorry, guys, just bear with me. 186. Yeah, that's right. Okay. Now, if I were to be trading gold today, it would be very, very difficult for me to get in, given the absolute monster candle that we got yesterday, preceded by, pardon me, selling. It's just getting stronger and stronger and stronger. That's the three black crows, and that's suggesting that there's further downside to me. And I'm certainly not going to argue with that, given that we have got on the weekly chart and or the monthly chart, wherever you want to go, that very, very big toppy situation where we've been pointing it out for months and months and months. Double top, now triple top, lower low, lower high, lower low, lower high, and it's just gone to trend. It's gone to trend absolutely perfectly. So next port of call is probably this level here, as I say, which is around about where we've got our take profit. So let's see how that works out. That's gold. So we'll leave that alone now and go on to the one that just hit profit, take profit. Swissy yen just hit our take profit level, our first take profit level. So stop loss now has moved, if you were in this from Monday. No, I don't think I called it on Monday. When did we get into it? Tuesday morning. So you would have to have been a member of the Slingshot Elite group, sorry. 163.18 is now where the stop loss is, in a safe place. Can't be losers on that trade. The other one that I'm in, which maybe we did. We traded this on the weekly. So if you're in the show on Monday, you would have got this trade. You probably don't want this trade at the moment because we've ended the trade here looking for take profit or first take profit up here. At the moment, that has worked against us. And today, I think, is crucial because we're at this support level where we've got break, which is what we got entered on. And then we've got the retest of that. So crucial today, what happens if we close below that level? I would consider closing the trade for a small loss. But if, on the other hand, we get that nice bounce, then we should be headed towards our take profit level or our first take profit level. So not too late to follow that one if you wanted to. I've chosen my entry on the weekly chart. As I said, trading this bar here. And my entry was at 1.3535 actually. I've been slipped 1.2 pips on the entry. I've got a stop loss 171 pips below that, which is just underneath the bar. I can't remember the level. 1.3365, there you go. 1.3365 is that level. And my first take profit is at 109 pips, which is 1.3644, I think, or thereabouts. Something like that. But you can see where it is anyway. It's just at the top of this bar here, or the close of this bar here, just before it bounces off the trend line. Righto, so they're the two trades, one up, one slightly down at the moment. What do I fancy today? Well, not a whole lot, I've got to be honest. The only thing I really fancied, which was a game changer bar from the weekly chart, as well as dollar versus the CAD. There's the game changer bar there, suggesting that we buy Kiwi CAD. I wasn't interested in that at that point, but what I did say was if we got a nice pullback, say to the weekly pivot, we would probably be looking at something like an inverted head and shoulders, and it might be a good place to pick this up. I haven't picked it up yet because I haven't had a candle pattern to enter off, but it has come back inside this range, and it's showing me quite a few things, actually. I'll go a bit wider so you can get a better idea. I know that sounds weird, but you can get a better idea of what I'm looking at. There's a couple of things, and one of them is, as I said, the inverted head and shoulders, which is kind of in there. It's tucked in pretty tight, but it may well be it. And I'll have a look at that level later to see how significant it is. If that's the case, then we've got a neckline coming through here, which coincides with the trend line, which also coincides with that horizontal level there. So we've got an actual confluence here of resistance, pretty strong. To trade into that was going to be a heck of a job. So I said to my group this morning, if you wanted to trade that, and we've got a fantastic slingshot pattern sitting there, I think it would be dangerous to take that at that level. But if you got an opportunity on a 4-hour chart, maybe down here or here, and you could trade, you could take profit at that level, then that would make sense. And then if it broke through there, happy days. If it broke through there and came back, happier days, because you could pick it up there again on the way up. So I do like this one, and I'm keeping my eye on it. What, of course, we're doing is trading one risk on currency versus another. We're also trading a currency that's been absolutely red hot in the Canadian dollar. That may or may not have a lot to do with the oil price just going through the roof. Holy crap, I just filled my car up. Couldn't believe it. Wow, they're punishing it us at the Bowser, I can tell you. How are you, mate?
Yeah, not too bad, mate. Not too bad at all. Yeah,
did you fill your car? You mustn't have filled your car up. You're still smiling.
No, I don't tend to use a car very much, actually. So my girlfriend uses the car more than I do. That's the one benefit. I mean, we pay a lot for kind of parking the car outside our house because we're in a kind of permit zone. But that's the one benefit of living in a city that's well connected, is that you can use buses and trains and things around, so I can walk most places. So I haven't filled the car up for actually quite some time. I haven't got a clue what the price is at the pumps at the minute.
Well,
My
happy
girlfriend
days.
does all that bit. Yeah.
I've got 3 of the bastards. I mean, vehicles. And yeah, it just, you know, you go, oh, this is not what I'm used to paying. This is far more. Anyway, what can you do?
Yeah.
And no, don't say buy an electric vehicle, because I'm not going to do that. I think they're ridiculous.
Yeah, I mean, I don't know. To be honest, I'm not, and I never have been a real. I mean, I'll call it a petrol head, but I guess it's a metal head really when you sort of consider that a lot of them are electric now. So when it comes down to cars, I don't do enough research on them to really kind of have a huge opinion one way or the other. A lot of my friends love them, but I've always found them functional, kind of get me from this place to this place, and I really don't care how I get from A to B in most regards. There will be sort of, you know, certain luxury vehicles that I'm sure are out there that I would probably feel differently about, but I mean, general cars are, you know, a car's a car to me.
Unless it's a collector's item, it's a complete and utter waste of money.
Yeah.
And it just, as soon as you drive it out of the showroom, you've just lost 20% of your purchase price.
Yeah, well, that's the other problem with them, isn't it? Yeah.
Duh.
Yeah.
Why would you do that?
Yeah, well, people love them. You know,
do you go to the broker and say, "Oh, here I want $10,000 on Aussie dollars"? And by the way, just keep 20% of it.
Yeah,
because you're a good fella.
Yeah,
it's the same thing.
Well, yeah, in a way, yeah. I mean, I suppose in the kind of binary sense, it is the same thing. But people have an affinity with things, don't they? You know, items are, I guess, sort of like what we've been programmed to believe will make us happier and more content and have status and all this sort of thing. So that ends up kind of driving people's decisions, maybe more than you know what would probably really make them feel a bit more well-being. But yeah, you know, that's what the car industry and every industry that's selling anything, I suppose that's what they rely on. You know, people's need for feeding an ego, you know, to kind of put it bluntly.
It's whatever floats your boat at the end of the day, I suppose, isn't it?
Yeah.
And don't talk to me about boats. Talk about wasting money, my God.
Because they don't float.
That was a painful experience, owning a boat. Anyway, I better finish this little theory I've got going on here with Kiwi CAD. And I pointed out the potential reversal pattern. What I haven't pointed out is a potential entry. Now, there was one, if you like, trading re-entries above a level, and that was probably the horizontal level, and you could have traded it in here somewhere. I couldn't. There's nothing there for me. So I'm waiting for price to get back above here and retest that level. Once that happens, I can then enter the market. I need to get some profit in the bank before here, and definitely before here. And that is the neckline that I pointed out before, which was coming through on the daily chart. Did I put that level on? Didn't really, did I? If we call that inverted head and shoulders here, that's the neckline there. So I'll just lift that up. Thought I did put that on. Must have been another chart. So that's the crucial area here for me. And that horizontal level kicks in as well. So I want to get into the market down here somewhere and get some profit in the bank before we hit that level. And the only way I can do that is on a smaller time frame. So 4-hour chart, hour chart, 30-minute chart, something like that. But my bias is definitely bullish on this one.
It seems to be ready for a retracement, doesn't it? The CAD. I tell you what, mate. I don't know whether I'm accurate, but there seems to be some sort of. I'll show you a couple of trades in a minute. There's a couple of trades that I've taken on. Maybe I'll talk about those now if that's okay, Annie, because
absolutely.
There's a potential. I
haven't got anything urgent at all.
And then we will. And then we'll talk about the Kiwi. Remind me to talk about the Kiwi. because we had that move last week that seemed unexplainable.
Yep.
So I've taken this Nasdaq trade, US 100 trade, long actually, and the reason for the long is I mean, it's really simple. You know, we're right on the neckline. We see yesterday's bar here that looks pretty good. That's the wrong line, I think. Not sure what that's doing there. Yesterday's bar looks pretty good, and there's a little weekly kind of trend line along here as well. So it looks like we're right on top of the neckline here. We've had a bounce off the neckline, stops just below yesterday's bar, and we'll see what we get. I mean, realistically, this could go all the way back to here. And I probably won't look to make anything out of the trade, in as much that if I can get some movement to the upside, I might just put stops at break even and let it go. I don't think that this is a low probability trade when you kind of think about the length of, you know, where it's got to go to. But by the same token, it has come down a long way. I mean, it might just kind of come to this level and then come down and take me out, which after I get there, I'll have to consider whether there might be sort of some profit taking or something. And actually looking at that level, it looks pretty strong, doesn't it? But that would be the break of the high of this bar. So the break of the high of that bar should release this a little bit, and maybe to the next level here, and then possibly we start to carve out something down here. So I'll figure that out as we go. But really, the first target has to be above this point just to make the trade worth it. But I'll figure out, you know, how to manage it, whether it's taking profit and leaving stops, or whether it's moving stops to break even. I think that might be a bit too tight to let this move to break even. So it might be a profit taking exercise, and then seeing if there's a little bit more of a boost to the upside. I think it's been a little bit overcooked. I think there's been sort of, you know, all of a sudden the narrative in the market didn't change, but the speculation and the fear in the market seemed to. That always makes me a bit uneasy about calling for big moves lower. And also the projections now and the commentators now invited on Bloomberg are all about recession and markets lower. That usually says to me that market's going higher. So I think there's a chance that this probably could maybe have a little rally. Doesn't tend to do that well into the end of October, but we're really sort of at that phase now where we are getting to the end of October. Mid-September is more of a chance for a rally, and in truth, there are levels lower down here that would be a lot more attractive. But you know, you look at this weekly, and it's had a pretty hefty collapse. So maybe just a little bit of a boost to the upside. I would potentially close a position completely if it hit this trend line up here. So it's not like I'm just going to let this one run and expect a huge run to the upside. But I think that there could be just a bit of a reaction in the opposite direction today. Anyway, we haven't had any so far when you look at these a couple of days here, but it just kind of, you know, collapsed again. So that's
good time, not a long time.
Yeah, I think so, mate. And the other one's the same philosophy. The other one's on gold, and also looking for gold long. And look, I just try to pick it right up down here on this bar. You know, big collapse to the downside on the bar. There are some levels that suggest that maybe gold could be at a potential support line here. Not that easy to see. Now, let me just see where it is on this. There it is there. So, you know, as I say, not that easy to see and not that easy to pick out, and maybe easier for people to see it from this point here, this point, and sort of, you know, see that there. You know, so there is a little bit, it looks to me anyway, like there could be a confluence line. This one could be questionable. And I'd appreciate that drawing trend lines kind of that start in strange areas, because, you know, potentially you could start it there, which means it's below. You could start it there. You could start it there. But you know, I've decided that there is an area there. But as I say, if people don't feel so comfortable with that, then maybe just using this one, it would suggest to me that we do have a support line here, and that's really all I'm looking for. Just a potential support level that this could get some juice up from. And the same thing, really, just kind of looking for, that would make that one below if it's there.
Have been triggered long as well on the breakout trade.
On gold.
Yep.
Yeah. So that, you know, I don't know, mate, but, you know, when you see bars like this, something kind of like back to the upside looks more likely. Difficult when you're at a low. Where do you put your stop? And all I tend to do when I do that is I have a look at the possible place that this could retrace to at first. You know, where could this go? So this one looks to me like it may well go to this point here. So if that's the point there, that would suggest to me that I'm going to be looking at around about $10 up, which means that my stop can be $10 down, which is down here. Down there. Actually, it's a bit low at the minute, so I'm gonna need to move it up a bit. So yeah, to around about there. So I'm just basically sort of like doing a if it's holding here, then I suspect it's going to test that. If it's breaking down, then because it could go anywhere really, then that's my safety net. But if it breaks this low, I'm out. That's the bottom line. I'm not going to let it test the stop. But if it breaks that low, I'll be out. Same with the same with the US 100. Same with the Nasdaq. If it starts to break down this low here, and I'm trading this off a 15-minute time frame. If it breaks down these lows here on the 15, if there's no genuine trend here, because it looks like there may well be just a little bit of a carving out, a little bit of an inverted head and shoulders, possibly in the making, which does mean it's going to take a little bit of time. But if it's going to break down here, I'm not going to allow it to go to stop. So because they are low probability trades in some respects, because they're counter trend, and it's a tricky one when I think of counter trend and low probability, because just because it's counter trend, it doesn't mean it's low probability if you've managed to pick an extreme. And I think these levels are genuine areas of that are potential extremes. So so you know, let's see what happens, mate. There could be a bit of a movement here. How I manage the trade, I think, is going to be, or if anybody's getting into it, how these trades are managed really is going to be the crux of whether you make money or lose money, or break even, or leave trades on from here on in. So that'll be the focus after, mate. That'll be the focus after I've finished up, probably here.
Yep, I've a lot with gold depends in the short term on that consolidation pattern, and whether they want to make a fool of us by grabbing the liquidity available at the top or bottom of that range.
Yeah.
And
I mean,
that could happen very easily. So if it breaks long, it could go short. If it breaks short, it could go long. That's what I'm saying.
Yes, absolutely right. Absolutely right. And I think gold is a really complex argument now, because if we take the base level argument for gold, which is buy it as a kind of hedge against inflation, and there is a disinflation or even deflation, which is potentially in the offing, you know, with what the central banks are doing in recession and everything else, that would suggest that gold's got no value or very little value, and would come down. However, it would also suggest that there may well be a weakening of the dollar, because the central bank needs to get more dovish to promote growth, which then boosts other assets, you know. So gold is you can trade gold against lots of currencies, but the one that we see on MT4 is against on this broker, sorry, is against the dollar. So that sort of strengthens the case for gold. If there is a recession and there is some global weakness out there and there's concern, that strengthens the case for gold. 10-year yields, which are, you know, very, very high right now, and really they're only high because the Fed said they have done a hawkish pause, and that means nothing. At the end of the day, that means nothing. A hawkish pause is effectively covering their arse and saying, look, well, if this is the big sort of aspect of this, if we don't get things the way we want them by the next meeting, we're going to raise interest rates.
Which trading dictionary is that one in anyway? Hawkish pause.
Oh, I don't know, mate. I don't know. I mean, there's probably a modern one that managed to write it in. But I think the other aspect of that is that there's a flip of that. If they don't get the data the way they want it, they're going to raise interest rates. Well, then don't ignore the other side. That means if they do, they're going to pause or maybe even weaken. And this is always sort of like the fascinating thing about market movements, is that there is a focus, a laser focus in a certain direction. When it's moved because of a speech, which is all it's moved from. It's not because of the data, it's moved because of the speech. So because it was because of the data, then it would have moved a long time ago. So they're always kind of moving on speculation of what will they do next and what do they need to see to do something next. It's possible that the market collapsed because it kind of was expecting things to change a lot sooner. They haven't changed, so now they need to reprice everything. So I accept that, but it was triggered off the back of the Fed speech, off the back of Jerome Powell's speech, and really, it's just as we know with economists, there's no way of them predicting what's even going to happen over the next 3 hours. Never mind the next 3 weeks, 3 months, 3 years. They haven't got a clue. Otherwise, they would have been on top of this stuff way before. When inflation started to pick up. If they truly knew what they were doing, and truly could see what was coming, then they would have got control of inflation 2 years ago, and they haven't. So all these kind of
remember.
It's transitory, exactly. Yeah. So all these speeches don't mean anything, and all these speculative kind of all this speculative rhetoric, it doesn't mean anything. So that's one of the reasons that I think when you see a move in a specific direction, the chance that gets reversed, because then data comes out and basically says, things are this particular way. There's a greater sort of kind of likelihood that trades then start to work out. So that's the idea anyway, mate. That's what we'll see what happens with these trades, and we'll see what happens with data, which actually there is some due out later on, which might kind of help this out. So that's the two trades I've got in. Now the other one we need to talk about. Sorry, mate.
Yeah, talk to me about the Kiwi. Is that what you were going to say?
Yeah, we need to talk about the Kiwi, and you may well be a bit more on top of this than me because of your part of the world. So the Kiwi had some huge boosts. Now maybe not against the dollar, but it's held against the dollar quite well while everything else has tanked. But big moves against the Swissy. That's probably more down to do with the Swissy, really. But look at that against the yen. A big move up against the yen. I'm sure you could find sort of pound Swiss as well. Sorry, pound Kiwi, which would have been the same sort of picture. So it tanked, and the Kiwi sort of, in fact, the Aussie Kiwi is probably the best one to compare it to, because otherwise you're just looking at the weakness in the pound, the weakness in the yen, and all that kind of thing. But if you look at the Aussie, same part of the world, and yet the Kiwi started to move up. So this isn't a risk on kind of trade. That suggests there's something specific to do with New Zealand. So my question, I suppose, is we seem to be having this run towards an election. Is that correct?
Yes. And so, as I understand it, is the reason.
Right. Okay. So what's happened here? Have we got a change of hands, or is it that the ones that they thought were losing are now winning?
Yeah, look, I don't know the exact details, but I was talking to a Kiwi person the other day, and they did explain to me, and I only had my ears half open, to be honest, but they did explain to me that there was manoeuvring, if you like, within the scope of the election.
Right.
So that's what caused it. And really, I don't suppose the pedantics matter. If it's strong enough to move the Kiwi that much, then obviously it's significant.
Yeah. Do you know, this is the interesting thing I think about currency.
But it's going to be a case of probably by the rumour, I think. Yeah.
Quite possibly. Do you know, this is the thing I find interesting about currency trading, and this is really sort of for everybody in the room. It's much better, in my opinion, to start with your own currency and see how it moves and why. If you're sort of like trying to learn about fundamentals, the arguments and the learning curve is so broad and so sharp that you're much better off sort of like, figuring out where to start. Now, the dollar's a great place to start, of course, because everything's related to the dollar. But when you're looking at the dollar, of course, you need another currency to trade it against. Now, this is no different, in my opinion, if anybody's a sports fan, no different than sort of like following a specific team. You kind of start getting a decent view of when that team is much more likely to come up against another team and win. are much more likely to come up against another team and lose. You've got certain players that you know when those particular players are missing, they've got a certain chance of winning and a certain chance of losing. So same with currencies. I think it's better to obviously sort of have king dollar as part of the pair when you're analyzing, and then use your currency as a way to learn how currencies move and what really drives a currency, because everybody will understand better than most other people in other parts of the world what is happening internally. And even though the Kiwi dollar might move a lot on macro factors, there are also every now and again these kind of internal forces that will move that currency. When I think about the UK, same sort of thing. If there's an election due, that changes the dynamic of how you would trade the pound. If there is a budget release due, that changes the way that I would approach trading the pound. If there is a vote like Brexit that we had, then obviously that changes the way that you view the pound. So understanding your own personal currency, even though it may not be one of the kind of big guns, or it might not be a currency that is as commonly traded, I think is a much better place to start than trying to look in a corner of the globe that you know very little about domestically. So I guess if you're in Singapore, then obviously the Sing dollar is a great one to kind of really understand. What's driving it, what budgets are driving it, and then sort of like start to see how it moves against the dollar. Then you can extend out, pound Sing, euro Sing, and then you sort of like bring the other ones into play. But putting the Sing in your currency pair, I think is quite sensible.
So much of life and trading and anything you name, really, it boils down to common sense, doesn't it? And that's really what you're saying. It is common sense.
Yeah, it's common sense. Yeah,
as humans, we try and twist and turn and flip that on its head and go, "Oh no, that's too easy. We can do this. It's much more rewarding."
Yes,
that's who we are.
Yeah, exactly, man. And it actually is common sense, and it's kind of working smart rather than hard. We don't need to work as hard as we think, because the information in our own nation is so easily and readily available in comparison. Even if I go on Google, everything's about the UK. I'm not going to get sort of like I'll get very rarely will I get kind of any news about what's going on in India or Malaysia or Pakistan or Iraq unless it's international news. So it's much easier just to kind of go, okay, what's really driving this economy? Because that's what you're doing when you're trading a currency. You're judging the economy. What's really driving this economy? How are the jobs? What's the jobs market looking like? In what areas is the jobs market kind of booming? What areas is it kind of diminishing? What's productivity like? What's GDP likely to be off the back of that? Then you start to get a view of where your currency may go in the next sort of like 3 months. And you must find it, mate, with the Aussie. You probably find it, generally speaking, a lot easier to pick the general direction of the Aussie fundamentally, sort of like what's going on in the Australian economy than you would say what's going on in Ireland.
And it's not only, the numbers and, the interest rates, all those things you just mentioned. You actually get a feeling if you walk down the street, what the economy is like.
Yes,
you actually get that feeling. You wander into the shop and everyone's smiling and it's all going well. You go, "Hey, you go, mate. Oh, good." But they just tank the dollar because of this, because the economy is just about to go bang. Why is it going to go bang? Because the Prime Minister just said that X, Y, Z. Yeah. You'd be surprised what you pick up just by walking down the street.
You're absolutely right, mate. That's a really good point. I suppose it's those coincidental kind of stories, that then come out. What are your friends doing? How are your friends?
And by that, I don't mean the bloke in the pub who whispers, "You got to buy gold," because that's not what I mean at all.
No, you're talking about your friends who are going, "I'm finding it really difficult to pay my mortgage at the minute, and I've got a mortgage coming up in 3 months." Because then you start to think, okay, well, if that person's having it with their sort of like situation, is there sort of like a broader dynamic kind of going on here? You start to kind of like, then sort of like think about the macro picture within your region, your country, and your town. Maybe that's different as well. Do you know what? Every day I look on property prices. Every single day I'll see what's going on with the property market. And there's a few reasons I do it. One of them is that I'm just quite interested. But the other thing is that it really is a main story right now over here. That property prices are tanking and interest rates are going to harm the thing. But I'm not seeing it. I haven't yet seen what's that the property market is sort of like really changing, particularly in my area, and it's that kind of thing that will give you a different opinion. Well, everybody's selling the pound because they've read the data in a different region of the world that this is all going on. We can then look at it over here and go, actually, the pound maybe not be quite as weak as it seems. Or that the narrative might not be as dire as it seems, which then suggests that if the pound does tank, that if the value does tank, there may well be a buying opportunity not too far around the corner. So it's things like that as well, isn't it? Sort of property prices, food prices, and which I have seen going a lot higher. So you know about inflation
everywhere.
Yeah.
Mate, don't buy a car anytime soon. Telling you. Well, certainly not a petrol.
Well,
in fact, I've got three that you might like.
Well, free petrol cars. Do you know what? Interestingly, they're talking about some sort of change in the law over here about petrol cars, and it might well be a decent time to buy them at the minute. For the next 10 years, I think they're going to be okay over here.
Well, yeah, look, they've got a long way to go with these electric vehicles as far as I'm concerned. And the biggest problem I've got with electric vehicles is the resale of electric vehicles. Because what's going to happen? Everyone who can afford an electric vehicle now has probably thought about it, or maybe even gone a step and bought one.
Yeah.
And in, I don't know, 3 or 4 years' time, depends if they're on lease arrangements or whatever, that vehicle will be on the second-hand market.
Yeah.
And that's well and good. The problem with that is that in a couple of years of the second person buying that, the battery's going to need replacing. And the batteries are something like $20,000.
Yeah.
That's really, really poor as far as I'm concerned, because it's the same old story. Those who can afford it will afford it. Those who can't afford it will buy it secondhand. And guess what? They're going to buy the problem.
Yes. Yeah.
So, I think that stinks, frankly.
Yeah.
The only way to stop that, of course, is to not have a secondhand electric vehicle market, I suppose.
Yeah. Well, there will be.
Anyway, I'm sure they'll sort that out down the track.
Can we check the room, mate? I just wondered if anybody's got any thoughts about the market right now. Where are things at? I mean, I have to say there are certain days that I wake up and I think, okay, just don't trade. And there are certain days that I think actually there could be an opportunity. I've got to be honest. I think today is an opportunity for counter trend trading. That is genuinely, when I say counter trend, that's exactly what I mean. I don't think that this is necessarily a bottom. But I do think that we might get some easing in the opposite direction, at least for a period, at least for sort of half the day or something, which is why I've taken my positions, the positions I have. But I'm interested to sort of like know where everybody else is at. What's everybody else is thinking right now of the markets, and are you guys confused? Are you starting to notice things? At the end of the day, Jeff and I. We're doing this show. This is our last Thursday, by the way. So on that's right, isn't it, Jeff? Yeah, next week. Yep. We'll be just on Mondays. But
very early 1 o'clock for me. Geez.
Yeah, you're going to enjoy that. But we are here for you guys. Ultimately, we're here to share our trades, of course. But really, we're just describing trades that we would take, and. If it makes you some money and you go in a little bit, that's great. But that's not really the idea. The idea is that we like everybody here to kind of participate and say, okay, it doesn't matter how it's better to make a mistake. This is the thing. It's better to get things wrong, because when you get something wrong and you accept that it's wrong and then sort of ask for help, then you kind of move forward. That's progress. So it's better to get something wrong. So even if you're not comfortable yet with the markets or trading, this is a great place just to kind of have a chat and just sort of, ask us our opinion, if you like, or tell us what you're thinking about the market, and we'll sort of like see if we can maybe shed some other light on it for you. So if anybody's got anything, that you can come on camera, you can come on mic, or you can chat. Just put it in the chat box. It's not a problem.
I'll give you a prime example of how valuable having trading buddies are. And on Monday, I'll take a screen, mate, and I'll show the people. On Monday, I was in my Q&A session that I have each and every Monday with the guys who are in my chat session. What are they called? Slingshot Ultimate or something like that, anyway.
Slingshot Ultimate. What a name.
Something like that. I didn't name it Ultimate BS as far as I'm concerned. But anyway, Gary, who's in the room, said to me, have you had a look at Swissy yen? And I said, oh, not really. I'm not a massive fan of trading Swissy yen. But anyway, I did have my chart drawn up, and it was drawn up like this, with a descending channel and a horizontal level. Well, I think I had the horizontal level, can't quite remember exactly the circumstances. And Gary said to me, look, there's a big, strong break of the trade line here. And of course, Gary knows my system, and that is one of my candles, right? At that particular point. It's called the dominator. So he said to me, is that tradable? And I said, well, double top, lower high, lower low, lower. Why not? Because when we're trading reversals, and this of course is a massive reversal, without question. When I'm trading reversals, I always have to have a chart pattern that suggests that it is going to reverse, and then something to back that up. And that generally will be a lower high. But it's far better than that when I sat down and had to think about it. Because if this is a double top, then you can probably call that the neckline of the double top. And if that's the case, this just smashed through it, the candle that Gary was talking about. It also smashed through this level. And then we got the perfect retest with this candle here.
Yeah.
The perfect retest. So I said to him, mate, I'm in. So I did place an order there, and that just hit TP1 not long ago. Yeah. So if Gary hadn't have been in that room, he would never have pointed that trade out to me, obviously, because he wouldn't have been there. And I think three of us were in the room. We all benefited from that. So that's to me is the value of having trading buddies and having little chats and meeting up and sharing. It's not always a trade, but oftentimes it's just an idea, as you say.
Yeah, I mean,
and that's why we were here. That's why we started this show.
Yeah, exactly, mate. And it's also to kind of like make sure that we're kept in check, isn't it? Because it's very difficult sometimes. The reason trading can be a lonely existence, is because we can get into our own heads. We can actually talk about getting into our own heads. That Swissy, that CAD Swiss, mate. I mean, I'm just like, anyway.
Look, I've nearly taken it off my thing. Look at the bloody thing; it's unbelievable.
It's crazy, isn't it?
The good part is I can say, "Oh, we got in down here."
Yes, we got in right.
We don't have to tell everyone where we got out.
Yeah. But you can get into your own head, with trading, and actually sort of having sort of like some other people to talk to about it. It just kind of relieves the intensity, that trading can provide, because it shouldn't be joyless. It can sort of like have some joy and some pleasure, and sometimes you just need sort of like somebody just to bring you back in. There is, historically there are people that, unfortunately, and we all do it, I've done it, I'm sure Jeff has done it, but every trader has done it, where they've just put too much money in the market. They put too much weight on one particular trade. And sometimes we just need sort of, you know, just to talk through these things, to say, well, actually, why don't we just take a step back a little bit? You know, I know you were finding the start of the year very difficult with trading, because we didn't have the setups that you needed. But then all of a sudden, we kind of get into, was it March? And you know, some of the trades and the way they kind of went, multiples of risk. And I suppose that's the reason we need trading buddies, is because we need to sometimes get through those tough moments and remember, we're not chasing the losses, never ever chasing the losses. We are just waiting for the environment to change and allowing, when we do kind of like get the environment to change, that we are really kind of after those multiples that make up, and some the periods where they're tough, because they will be tough. You know, you're not going to win a trade, lose a trade, win a trade, lose a trade. You can't lose. But it doesn't matter. The losses don't matter. They really don't, as long as they're managed correctly. And then when the winners come, as long as they're managed in such a way that they make multiples, then you really, it's sort of, you know, it's not such a difficult game. I'm not going to say it's not a difficult game, but it's not so hard. And sometimes just kind of getting together, just, you know, reminds us of that, which is another benefit of trading buddies, isn't it, mate? It's just
absolutely. And you know, there are times, and they're not infrequent, I've got to say, where something that you have said has just gone into my head, and I'm going, oh, hang on a minute, I didn't even take that into consideration, and I'm long this thing that I probably should be short, given the circumstances. So maybe, okay, I'm not going to change my mind, but I am going to reduce the risk I'm taking on that, because that is a valid point that you've just made.
Yeah.
So, I think that's another point. This CAD Swiss, Ash, we were talking about it the other day. The only day that this has not gapped down since this started is that day there. And I suppose technically it probably did by about 1 pip or something, but every day it's gap down, gone, gap down, gone,
I mean,
gap down, gone.
That's a hell of a statistic, mate. But can you see one day where there's a red bar in the run?
Well, I think that little doji there, the same bar, has just got a red body, but that's it.
Okay.
And there was one 2 days ago as well.
crazy move with this one. I mean, I've got to be honest, you know.
That's the thing that pisses me off. Because if we did have a red bar down here, I'd be back in the bloody thing.
Yeah, me too. There was just no opportunity to kind of get back into this one. And I guess this is always the thing. I guess it's one of those that if you put your stop under every single day's low, you know, going into the next day, that's a way to trade it. But you know,
you've been out twice, once there, once there. Twice. That's it.
Yeah. Okay. I mean, the problem with things like this is that it makes you think that that's a way that you can do it, but this is quite extreme.
This is extreme. Actually, that's not quite true. Depends on where you put your entry. If you entered above the bar, then no problem.
Yeah.
And I think that went short before it went long anyway. So.
Yeah. I mean, it was a crazy move. But you're right, mate. You know, this is a lot down to do with what's going on with oil. And oil continues to surge to the upside as well.
I don't need to look at the oil chart. I just need to go and fill my car up every day.
Yeah. Well, the oil, you know, interesting. You look at that trend line from December 2021 and draw it down, and I think we're currently through that, which you would wonder whether that would you'd wonder whether that would change. You know, I mean, we've had a test of that area and it's kind of gone higher, but you wonder whether these areas eventually might hold. But it's similar to the CAD. There was one opportunity with this one on the weekly, which was about 4 weeks ago. That one there, that was the one opportunity. But you know, these things happen. Of course, you get kind of breakouts from kind of from very shallow retracement, because the story about oil is very, very positive at the minute. So I don't know. The dollar strength has not curbed this, and the concern now is that if the dollar does weaken, then oil goes a lot higher for a different reason, other than the Saudis kind of cutting production. So there's probably more to go with this. I don't quite I don't quite kind of agree with the Russia over the winter scenario 100%. I think that was last year's news, and I wonder whether it'll be different this year. As I said a few weeks ago, the G20's tone was a lot more, I suppose, just a bit more gentle towards Russia. You know, they condemned the war, but without naming them, and I think that little kind of adjustment in the language could suggest that there might just be a bit of a cooling of tensions between the West and Russia. And it's always difficult to know. You never know what's going on really with this stuff. So I'm not kind of calling for 130 or anything like that, but I do think kind of getting to $100 is looks achievable. Maybe even 105.
You probably have to think that's a target immediate, wouldn't you?
Yeah.
Where is it here? Yeah, about there.
Yeah.
It's hard to see missing that.
Yeah, it does look in that area. I think when you kind of like look on the weeklies, it does seem to be there does seem to be a level around about that point when you look at around about the $100 mark. So yeah, this looks like it's going to go a lot higher, and for that reason, you wonder whether the CAD's going to come down, anytime soon. And it looks like the CAD's formed a genuine bottom against the Swissy, and for that reason, I wish I was still in, because you don't pay anything on it. You actually get paid to hold it. I wish we'd sort of given it a bit of time, but it wasn't. I don't think either of us got out because we thought it was coming. Because we didn't want to hold it. We were just hoping for a retracement and then get back in and sort of try and trade it as a normal trend. But it just hasn't happened.
To load up.
Yeah.
Well, oil's the same story for me. I got into oil here.
Yeah.
And got out here.
Yeah.
So yeah. I've done that on oil. I've done it on CAD Swiss, and I've done it on pound CAD.
Yeah,
and every one of them has gone double what I took out of the market. Yeah. So I'm not a trend trader, as you can tell. Doesn't work for me at all. Yet. And you were talking about gold before. Here's what I see on gold, and of course, I'm a bear on gold.
Yeah.
Well, even on the weekly chart, you can see it, I think. In practice, probably easy to see on the weekly chart. Forget this double top, but that double top, lower low, lower high, or lower high, lower low. High there was a bit tricky, but now lower low, now lower high, now lower low is about to form, or perhaps about to form on the weekly chart. You would think it would. So again, it's where is this going to stop? And we're kind of at a reasonable level at the moment. I'd agree with that. But again, I go back to here. And I go back to that one. Then that one. And look where that one takes us to.
Oh, that'd be lovely, wouldn't it? What price is that down there?
I'll put it on the horizontal level if you like. So you're looking at 1678. So say 1700.
1678. Okay, that's on the weekly, yeah.
But that's what I've been seeing for the longest time. I mean, it may not happen, of course, but once again, I got out of it too early because it does retrace substantially, this thing.
Yeah. Yeah.
And it does get a bit scary. So, yeah. Breaks this level, we're well on our way. If it broke and retested there, I think we're well on our way down to here. So that's my focus on gold anyway, still there.
Yeah. It looks like it does look like it's in a bit of a waterfall, doesn't it? And
it's gone to trend again.
I certainly wouldn't be holding on to this one for too long, but yeah, I think a bounce could well be on. I don't know, maybe it just doesn't happen, but a bounce looks to me like it could be on.
Euro today, untested yesterday, still untested, but gee, it tried hard, didn't it, on that last 30-minute bar. Obviously, I can't trade it from here. I'd have to see it pull way, way back away from here. So not attractive at all today, euro dollar, I don't think. The dollar itself has gone further than I anticipated. I was looking for a false break here with this candle. Forget that. That's gone. Where does that finish? Well, now it looks to be 108 to me. We're about 150 pips away from there. I can't see that not hitting that level now, frankly. Of course, anything can happen, but this is still on fire, and this is week 11, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, this is week 11. Man, like I said at week 8, go back and see how many times that's happened.
Yeah, there's been some pretty solid trends, isn't there, recently?
Yeah, sadly, I hate it. It's no good.
Not nice trends though. Yeah, not nice trends. I think that's the thing.
Vicious.
I mean, there's vicious trends really. I mean, they're not as easy to trade. I mean, they look easy because they're all in one direction. And I suppose psychologically, maybe it's a little bit easier, but actually difficult to actually trade them unless you're in right at the bottom. Because as soon as they're gone, they then start to kind of represent.
They're staying gone.
yeah, they're staying gone, and they represent just too high value to kind of get into. So, haven't really enjoyed any of these. Well, there's a few that we've enjoyed, but really you've got to stay in to fully enjoy them. And
I'd be fully enjoying them if I'd stayed in pound, CAD, Swiss.
Yeah,
and oil. I wouldn't be complaining at all.
No, you wouldn't. No.
Bring on the next one.
Yeah, well, you'd probably be saying I might take the rest of the year off because there's no point in trying to trade when all I need to do is put on one position and then just go to sleep for a few months.
Yeah, but who does that, right?
Yeah.
There's always the next wave.
Yeah, there is. There is. And it will come.
Just around the corner.
Yeah.
Of course, from now I'll be looking for reversals. So already I'm thinking on the weekly chart, just like I said on the daily, this is a sell position to me. You sell underneath that bar. Weekly is going to be exactly the same. If that bar looks like this at the end of the week, on Monday I'll be thinking short underneath it.
Yeah. Yeah.
We'll see.
Okay, mate. Well, we are at the top of the hour, and
not one person's asked us a question. Goodness me.
Which it suggests to me that it's possible that people are listening, maybe in the background, or maybe on their phones and driving and stuff like that, which is fine. So maybe people can't come on. But
maybe that's right.
Yeah, it's probably time for you to go and get a nice crate of wine.
I think I'll probably stop just before the crate ends, but yeah, I'll go and have a cup.
Need one for tomorrow.
Indeed, it's Friday tomorrow. Friday.
Yeah.
You little beauty.
Yeah. Okay, mate.
All
well,
we'll get out of here.
We'll get out of here, and we'll see the guys on Monday. And I'll speak to you in a bit.
All righty. Thank you guys who have turned up on Thursdays religiously. We appreciate that. But as I said before, and I said at the beginning, this is indeed our last Thursday on Trading Buddies, but we'll be back on Monday and every Monday unless there's a public holiday in the UK or the world blows up. I think I'd rather a public holiday. Have a great weekend. Thanks for being our Trading Buddies. Bye-bye for now. Hooroo.